Good morning traders and welcome back to It's Crypto's trading channel. In this video I'm going to be performing a multi-time frame price action analysis on the situation we are currently seeing on ARUSDT. So Airweave, this is a coin that we are holding in our spot portfolio for long-term expectations. Airweave is a very bullish coin, fundamentally part of the Web 3.0 coins, and I am very bullish on this token for 2022. However, the short-term outlook of the market is bearish. We have a lot of bearish patterns on Airweave, so let's get straight into it, starting here on the monthly time frame. So here on the monthly time frame, the market made this impulse to the upside, breaking above this level of resistance, followed by a correction. The market then bounced off the 0.618 fib. If we take our Fibonacci from the low to the high of the impulse, we can see the market bounced off the 0.618 fib and started to make the continuation to the upside. The market did, in fact, go and make a new higher high, breaking above this zone, but then we saw a very strong rejection and this short-term top here. You can see multiple rejections, a lot of wicks here, showing there is very strong supply at this zone. Also here on the monthly time frame, the previous monthly candle closed in this manner, and we have a large wick to the downside and a doji candle, a bearish doji candle at a strong level of monthly supply. Now, as you all know, if you follow our videos, when a candle closes in this manner, you can expect the next candles to fill in the wick. And that's exactly what the current monthly candle is doing. It is filling in this wick. So we have the low of the wick. Let's just identify that here. Now dropping down to the weekly time frame. So here on the weekly time frame, everything is clearly looking bearish. We have this break above the highs. So we had resistance here. The market broke above this zone and then broke straight back down below this zone. So this area here, all across this zone, is clearly previous resistance here. We broke it to the upside. It should have acted as support here. Instead, the market broke it to the downside. Therefore, all of this resistance will once again be resistance at this zone. And you can see that's exactly what the market done. It made a bearish impulse to the downside, followed by a correction, and retested this resistance as new resistance and is showing multiple rejections at this zone. We also have a very, very large head and shoulders formation with the left shoulder, head and right shoulder. Very easy to see. Very large head and shoulders formation. So after an impulse, what you expect the market to do is make a correction. We have the bearish impulse. The market made a correction. If we want to measure the correction, we take our Fibonacci from the high to the low of the bearish impulse. And what we can see is the market corrected to the 0.618 and shown a rejection, and it closed below the 0.5, the 50% fib, which is also in confluence with this resistance, which I've already identified. So we can expect to see the continuation to the downside. If we take our Fibonacci from the high to the low of the weekly correction, so from the high to the low of the weekly correction, we do have the possibility of coming all the way down to test this monthly previous resistance, which I've identified as new support in confluence of the minus 0.272 fib. So this is previous monthly resistance. If we just quickly show you again, this is previous monthly resistance, which should act as support. And this is where the market could go in the short term, all the way down to around $26 here. So let's just delete our fib here. We have our two downside targets. This is what I expect to see in the short to mid term. Let's drop down to the daily time frame and see what we can see from a daily perspective. So here on the daily time frame, this is the fake out to the upside that the market made and likely trapped a lot of bulls. We have a clear, very clear level of supply all across this zone. Recently, the market made a little fake breakout above this supply, and then followed by this M formation and dump back below. So we can clearly see this M formation here. If I get my brush tool, it's easy to identify. The market goes up, down, up, down. So generally speaking, if the market, when the market prints an M formation like this, the market tends to complete the pattern at the neckline, which is previous support, turn resistance, before we see the continuation to the downside. And that's exactly what I'm looking for here. So we have the M formation. We expect the market to complete the pattern at the neckline as it is a highly probable pattern within the market. So let's identify our neckline, which is exactly this low here, this low of the wick here. So we have our neckline of the M formation. What we can also see is the market is about to test daily support. We do have daily support all across this zone. We have previous support here, resistance here. The market rejected this zone already here. So this zone is clearly acting as some daily support, some daily demand here. We also have this daily bearish impulse from this high to this low. So if we take our Fibonacci from the high to the low of the daily bearish impulse, what we can see is the market lines up perfectly. The neckline of the M formation lines up almost identically to the 0.5, the 50% fib. And we have a bearish impulse. Now, as you all know, if you follow our videos, after an impulse, you expect a correction. We are testing daily support. We have an M formation, which is our neckline target. We also have an impulse, and we expect a correction. This is a lot of confluences that we want to see this move to the neckline. So this is a retracement move to the neckline. So what we will be doing with students, all inside of this area we are currently in, we will be monitoring price action on lower time frames, specifically the 1 hour time frame. This is our entry time frame for this particular harmonic strategy. We will be monitoring price action all inside of this zone on the 1 hour time frame for the market to cut for bullish. If the market cuts for bullish and satisfies our entry rules on the retest, on the 1 hour time frame, if the market satisfies our entry rule, we will be taking a nice long all inside of this area and potentially capitalize on this corrective move to the neckline and the possibility of the market forming a new lower high here. So obviously we have a high, a lower high, and we have the possibility of forming a new lower high. So we will be waiting for the market to satisfy our entry rules. If it does, we will take a long. If it doesn't, more downside is likely. Obviously, we cannot just take the trade because we expect this move. First of all, we need to see if our entry rules are met. Then, if everything goes to plan and the market does make a new lower high at this zone, this is a very important zone for the participants to watch. So if the market comes up to this area and rejects this area, it is highly likely that we fill in the monthly wick and maybe even completes the impulse correction continuation pattern from the weekly time frame and come down and hit the monthly previous resistance time support, which I have identified at around $26. On the other hand, if everything goes to plan here and we come into this area of resistance and the market breaks above this zone, this will invalidate the whole setup which I've just said. And on the retest, this will be previous resistance turn support, and we can maybe look for a long position. Obviously, this is just all skeptical at the moment. There is nothing indicating this would happen, so we have to wait for the market to show us, and we need to react to it. At the moment, what we have is a harmonic pattern which tends to complete at the neckline. We are oversold. We are testing daily support, and I do expect a bounce and a retracement to the neckline of this pattern. All inside of this area, we will be looking for a potential long position. The target will be the neckline. Stop loss will go well protected below structure, and this would give us a nice potential 1 to 3, 1 to 2.5 RR on this potential move to the upside. Remember, we cannot just long here. We need to wait for valid entry rules to be satisfied on the 1 hour or 4 hour time frames.